First panel is about the energy transition and emergent risks. So I'm joined by 5 brilliant KPMG colleagues. We've got 5 different geographies here to give you different perspectives on the energy transition. I'm going to, Angie, come to you first, just because we've just seen their policy risk is a major factor. Probably the most significant policy development has been the Inflation Reduction Act in the US over the last year. We feel the gravitational pull of that from Europe. Tell us your perspective from the US in terms of what that's doing for clean energy investment.
Yeah, well, maybe let me just level set on what the IRA, or Inflation Reduction Act, is for everyone. So the IRA is in conjunction with what we call the IIJA, the Infrastructure Investment and Jobs Act. The IRA is a $390 billion bipartisan investment towards clean energy. The IIJA is a $1.2 trillion bipartisan investment towards upgrading the infrastructure. So it's the power grid, but it's also roads, public transportation, et cetera. So that represents, first of all, those are huge dollars, but that represents the largest climate and energy policy investment ever in the history. It also represents the largest investment towards infrastructure that the US has made since the 1940s after World War II to electrify rural America. And so why did we do this? Well, we did it for a couple of reasons. One was to progress the US's commitment towards net zero and our commitments with the Paris Agreement. But also, we see this energy transition coming, and we see it as inevitable. We also see that the US has benefited for several decades now on energy security. We've been blessed with a large number of resources, and with the shale revolution and the oil and gas development, that's something that's really been benefited for the US. So the money's getting out there, and we're starting to really see some wonderful results.
Yeah, huge impact, I think, and a global impact too. Angie, one of the questions my clients in Europe ask me is, so if Trump wins next year, is he going to get rid of the Inflation Reduction Act? Are all these tax credits going to go? Tell us what the answer is. What's the advice you give your clients on that one?
Yeah, that's a very good question. I get that here a lot. We also get it in the US. I'm not I don't have a political crystal ball, but I can tell you this. If you look at where the funding has gone, 80% of the funding has gone towards what we call red states, so Republican majority states. I think it's going to be very difficult once those projects have been announced, the jobs have been created, people are getting excited. I can't predict exactly what will happen, but I think the Republicans would come under some significant pressure from their own constituents.
Apurva, can I bring us closer to where we are today in India and India's energy transition? Because in a way, what I've heard has been a desire to kind of try and dominate some of the supply chains as well from India's point of view, create the jobs, create the investment here in India, become self-sufficient in energy. Tell us about where your perspective on that energy transition as it stands at the moment.
Thanks, Simon. I'd just like to start by saying I think the growth and development story for India is really quite a complex one. Right? We're one of the fastest growing economies. At the same time, we have the largest population in the world now, and a rapidly urbanizing population, the largest number of the world's poor, right? And those with the least access to energy. So these are multiple developmental imperatives. But all of these developments, they put a huge strain on our resources and on our energy demand. In fact, in the next 2 decades, India's energy demand will be 25% of the world's energy demand. So that's huge. And that also is a big challenge for us when it comes to what you said, achieving self-reliance, or what we call Atmanirbhar Bharat, like relying on our own resources, right? So that's a huge challenge. But having said that, I think it's also important to acknowledge that India's renewable journey, especially in the solar and wind space, has been quite phenomenal. So in the last couple of decades, we've seen growth that analysts never expected 2 decades back. So that's been a phenomenal story. Started with wind and then with solar, and largely driven by policy incentives and regulatory pressure as well.
Tell me, how are ESG considerations being factored into the companies that you're working with in India? How large are they looming in terms of corporate boardroom and decisions?
Simon, this is my second stint with KPMG. So I was here with KPMG around 13, 14 years back when we had first set up the practice on ESG specifically. And the world was very different then, right? So there were just like a handful of companies that were disclosing, so they were just reporting. And a lot of companies that were investing on climate for the primary purpose of getting additional funding from the voluntary and mandatory markets at that time, like, for example, the clean development mechanism that existed. So that was it. But ESG was not a mainstream boardroom conversation topic at that moment. And the world has changed. India has changed, and in the last 1 decade, it's been a sea of change because now we have regulation. When it comes to disclosure, we have something called the Business Responsibility and Sustainability Reporting, which is fairly extensive and requires companies to gather data across not just their own operations, but across their supply chains. So disclosure has come in a very big way. Companies are now being rated with their peers because a whole lot of rating agencies have mushroomed. So it's keeping the corporates on their toes. And at the same time, this ESG has become a boardroom conversation. And if you talk about material issues, I haven't worked with a single client where climate change is not one of the top material issues. And how do you deal with that is, for example, if you're a services sector, then you're switching your power source. If you're an industry, then it's perhaps harder to decarbonize. But this has been a very big driver, I would say, in the transition to cleaner energy in the recent past in India.
Sharad, give us the perspective. An area that's heavily dependent on coal and gas. Tell us about the perspective on the energy transition from Southeast Asia.
Yeah, so I think to appreciate Southeast Asia, we should know that this is a 600 million population region, probably 7th largest economy if it was an economic bloc, right? So and fastest growing, probably stronger growth rate than India. One of the things that comes to mind is what happened in China probably in late 90s, early 2000s, what's happening in India over the last 15 years. The demographic dividend is going to happen in Southeast Asia over the next 15 years. So when we talk to policymakers, the energy security and affordability is probably on the top of the agenda before we go to the sustainability, right? And this effectively means that we will continue to rely on thermal, cheap coal, and wind and solar will continue to come in as long as it has grid parity. The green hydrogen roadmap, the biogas is all at a very, very strategic level. Right. One of the interesting things that happened when we were working in Indonesia is we were asking them to shut down coal and commit to dismantling the coal projects because we are getting them blended finance. And they told us, hey, Germany is restarting the coal plants, so what is the guarantee that 20 years down the line, we wouldn't require our coal plants as well? So how about we mothball rather than dismantle? And that is the policy consideration which is becoming very, very important, isn't it? So while the basket of fuel options that Southeast Asian countries are looking at is all available, and we are not talking much of nuclear as yet in that region, but this morning it was interesting to see SMR being talked about, and this is something which clearly is on the policy agenda. So if you look at the 2050 energy sector decarbonization roadmap that was published by Singapore, we are talking of all the options being on the table, including nuclear. Subject to security, safety considerations. So I think to answer your question, there are a lot of R&D happening, there are a lot of investment dollars being put on green hydrogen pilot projects, some SMR discussions have started. Biogas pilot projects are being initiated. There is a sustainable aviation fuel pilot being implemented at Changi Airport already. So there are multiple initiatives, but all these countries are waiting for technological breakthrough and blended finance being made available for them to transition without compromising on economic growth.
Ayo, can I come to you? And Nigeria, hugely important energy producing country. Give us the perspective from Nigeria in terms of how your clients are approaching the energy transition.
Okay, thank you very much, Simon. To actually answer that question, we need to look at the structure of that industry in Nigeria. Today, in the upstream sector, the biggest player is the government itself through the National Oil Company, NNPC Limited. So you need to look at what has the government done with respect to net zero and then the other players in that sector. So starting with the government, you will notice that in COP26, the president made a commitment that Nigeria is going to be carbon neutral by 2060, right? As a fallout of that commitment, government then unveiled the Nigerian Energy Transition Roadmap. And it's a very robust document. If you study the document, you see a lot of steps that the government intends to take towards carbon neutrality. As a fallout of that, the government then enacted a law called Climate Change Act just 2 years ago. And it's a very significant act for us in the country because it tells the world that Nigeria is serious about carbon emission and that we are committed towards 2060 as sunset date for ending carbon emission. So in addition to that, the country then also decided to take this decade as the decade of gas, right? Being a transitional fuel towards carbon neutrality. That was also very significant, right? And the government is doing all it can to ensure that that is met. Given all the projections and prognoses, fossil fuel will still constitute a significant portion of energy mix in the next 20 years. IEA, OPEC all believe that. So they're asking themselves, are we going to fold our hands? Definitely not. So let us enjoy the music while it is on. So they are the ones picking up those assets from the IOCs and working them, although at low-cost model. So you've seen so many Nigerian independent companies picking up those assets and working them together with their Nigerian counterparts. And it's quite interesting that, for some of the oil service companies, they've had the not-so-good story of it because you've seen bookings reduced, you've seen contracts renegotiated to the barest minimum cost. So it's a mixed bag, I would say, but I can pause here while you take other questions.
Yeah, this is fascinating. I think the listed companies under huge corporate pressure, having to disclose everything, and then the independents, smaller independents can come along and operate those fields, lower cost, and maybe quite without the same level of scrutiny or investor pressure. So fascinating story, thank you. Trevor, we'll take a long-haul flight from Lagos to Perth. Let's start with your global mining perspective. As you said at the start, it all starts with metals and mining. So
yeah.
How are they approaching the energy trilemma?
It's really interesting because the world has really done the math. It's understood what 1.5 degrees needs in a carbon reduction solution. It back solves for the number of batteries it needs, wind turbines, solar farms. And then it starts to do the math on what it takes to build all of that infrastructure globally. And then it starts to turn to the commodity markets on where are we going to get it from. And that is now starting to really hit the road, Simon. The conversation around what constrains and what gets us behind the curve on the energy transition will come down to the availability and the timing of minerals. And it's been really useful to have critical mineral lists. It identifies which of those are more critical than others. But there's going to need to be more collaboration globally to access those reserves and resources than putting them on a list. And that will require significant amounts of policy compliance around some of the jurisdictions where those resources sit. Thankfully, we know where those resources sit. And if you look at some of the publications from the World Bank over the last couple of years, there's been some really good work done on what our global endowment across the Earth crust looks like for these key minerals. So we've done that work, we know where it is, but bringing it on stream in the time frame that the world's going to want is impossible at the current level and rate. Lithium is about a 1 million tonne per annum industry at the moment. It needs to be a 4 million tonne per annum industry by 2035 to supply what the world needs. If you look at somebody like Rio Tinto, they've spent 15 years and $15 billion getting one project to a place where it'll supply about 500,000 tonnes of copper into the market. And so the exponential growth that's required and the time frame to bring these significant deposits that will make a difference into the world is about 10 to 12 years.
I've really enjoyed our little tour around the world on our sustainable aviation. So I just want to say a big thank you to my excellent panel for taking part in the discussion. Thank you very much.